Hey everybody, welcome back to the channel. It's been about a month since my last video, but today I wanted to talk about some of the best investments that I've made in my life. And I'm not making this to brag or to gloat and feel great about myself, because I've made plenty of terrible investments as well. But I want to highlight the ones that have done well and why they did well, and kind of how I focus on finding winning investments and sort of my philosophy behind that. Now, this is going to be more of a conversational video, not going to jump around all over on the screen or something. So if you want to stick around, I think there's going to be some value in this if you're interested in investing and building wealth over a long period of time. So let's go ahead, let's get started with this. There's going to be 4 or 5 different investments that we're going to highlight in this video. So first of all, let's start off with stocks. Let's talk about some of the best stocks that I've had the best returns on and why that was the case. And so what you have to realize first of all is that, of course, I invest into index funds. A lot of people do that. We're not going to talk about index funds because it's pretty straightforward. You put money in index funds, whatever. Let's talk about individual stocks. So what I typically do is I'll invest into, I would say probably 3 or 4 companies per year. And that's it. And that's at a maximum. Sometimes it's only 1 to 2 companies per year that I really put a sizable amount of money into. And there's a reason for this. One of them is because I don't want to open up the 50 different fronts and I have 30 individual stock investments and I have to follow all of them. Honestly, it's really difficult to do that. So I focus on specific high conviction trades. This is something I learned from the Dumb Money guys and from Chris Camillo on his strategy with what he does. But some of my best stock investments, obviously a lot of them happened back in the spring of 2020, but I went pretty heavy into a lot of the gambling companies because I was very bullish on the idea of sports gambling. And this just so happened because I was writing a lot of papers in college about sports gambling. I was pretty into the legal aspect of it and looking at court cases and everything. I don't know what was wrong with me in college, but I was very interested in it. And so I knew that this was a wave that was coming, kind of like with how a lot of states are legalizing marijuana, right? So we see that happening a lot. You can see that wave moving. But I noticed the sports trend moving pretty early, and not a lot of other people, I guess, saw it coming. So what I'm saying here is that, not that I'm a genius, but that there's going to be times in life when you see an opportunity when nobody else is really looking. And so that's what was the case for me. So I was buying Caesars Entertainment, I was buying even Penn, I was buying a number of other gambling companies, casino companies, and they've benefited pretty significantly, like DraftKings, from this massive wave of sports betting. So I was in those pretty early. I think my best one of that was probably Caesars when I was buying it at the massive dip at 15, 20 bucks a share, popped up to over 100, 110, 115 a share. So I still have holdings of those, but usually I will get out of those. Usually I try to last at least a year so I don't trigger that short-term tax. But that was one of my best investments that I've made in my life. Now, we're going to talk about another stock later in this video, but I wanted to briefly mention the next one, the next investment that I've made that I think is one of my favorite and one that I think is really going to do well over the long term, and that is angel investments. Some people are going to categorize this as venture capital. You can try to use those words interchangeably, or whenever people say that, you can kind of just assume that they're going to be pretty similar there. So I've made a handful of angel investments over the past 18 to 24 months, and I've seen some of them, go up 10x or 20x. I mean, we're 1,000 to 2,000%. And I think there's a really great value in something like angel investing. Basically, what this is it's investing into startups or companies that maybe aren't public. They need some cash to really get going. Maybe they're not profitable at first sometimes. And so I'm able to put money into them as an angel investor, kind of like what you would think of if like the first person who invested into Facebook to get it started. It wasn't always just on the stock market. You had people who were doing venture capital and angel investments into those startups. So that's something that has been going really well for me. Of course, you don't want to count your chickens before they hatch. I mean, sure, I could have something that goes up 20-fold, but it could sputter out. I don't know. But that's one that's been doing really, really well, at least on the books. Now, that actually leads me into the sponsor for today's video, which is Sweater. Now, Sweater's mission is to accelerate generational wealth creation through venture investing that is accessible for everyday investors, accredited or not. Now, traditionally, venture capital investing has been reserved solely for the wealthy, sort of upper class citizens, and you would normally have to be what is considered an accredited investor to get into these early stage companies. But that's what's so groundbreaking about Sweater. It's a fully managed venture capital fund that anyone can invest into, whether or not you are an accredited investor. Now, ever since the 2012 Jobs Act, we've seen a number of equity crowdfunding platforms arise. So non-accredited retail investors like you and me can now buy shares of private companies, but the most lucrative of those companies don't really seem to be available on those platforms. So it was sort of a problem. So the rich kind of keep getting richer, and venture capital is still out of reach for the majority of people. And that's really where Sweater comes in. So Sweater, it's not equity crowdfunding. It's even better. So with Sweater, you can pool your money with other small investors and let their dedicated team of experts and analysts invest your money for you. So Sweater's process focuses on finding and vetting investment opportunities, negotiating those investment terms, and then building out a full portfolio of investments, managing those relationships and the needs of the founders sort of as they build those companies. So I personally plan on investing some of my cash through Sweater once they launch sometime in the next few months. And if you're interested in learning more about how you can invest through Sweater as well, then you can click on the link in the description below on this video and you can join their waitlist. So thanks Sweater for sponsoring this portion of the video. As you can probably tell, I'm very excited about venture capital in general, and I'm really excited that it's going to be open to many people as well who are maybe not accredited investors. So I have 3 more investments that I want to share with you that have really performed well and explain why they've performed well. And this one is probably going to be my favorite here that I'm about to talk about. And that is by taking a spread on debt. So basically what I mean by this is debt is really, really cheap right now. I think a lot of us know that. You can pick up debt if you have good credit or if you have assets. You can pick up debt for 2%, 3% interest. And so what I do here is I basically just build a spread on debt. So I'll borrow money at say 2.5% interest, and then I will lend that out, or I'll find a way to get that money at a stable, say 8 to 20% APY on that. So just to do some quick numbers on this, let's say that, for example, you borrow money against your house. Don't go out and do this, please, because there's a lot of risk. You have to calculate some things, so don't just go out and do this, please. But let's say that you can pull $500,000 out of your house, and you can get it at like a 2% interest rate, 3% interest rate, right? So let's say 3%. And then let's say you can take that $500,000 that you borrowed against your assets, and you can lend it out at a 10% rate. And you're paying 3% on that $500,000 that you pulled out. And so if you follow along here, you can see you're making like a 7% spread there on 500 grand is about $35,000 per year extra for really doing nothing. I mean, for just making your money work for you, or if you have good credit, you could possibly think about doing this as well. Once again, please don't go out and do this because there are a lot of risks involved with this as well. Like if somebody defaults on that debt that I'm issuing to somebody else, or if I'm doing something in the crypto world, like with stable coins, Ankrum Protocol, you can get 20% yield on that. We're gonna make a whole video on that because it just sounds wild on how to get stable APYs. But even something like the Series 1 savings bond that the US has, you can put up to $10,000 into there. It's netting 7.12% from the federal government. So you could take out debt at a lower rate, put it into that and make a spread on that. So you can see kind of how that works and how that operates. You know, there's a lot of problems with that as well, but that is something that makes me a decent amount of money every year, and it's basically free. I mean, I don't really do anything besides just move some money around to some different accounts, and that's the basics of it. So the next investment that I want to share with you that is arguably probably my best performing of all time in the stock market, it's Build-A-Bear Workshop, which that sounds just stupid. It sounds really, really stupid saying this. And I'm only mentioning it now because I've sold off almost all of my position and I've been selling it off because, you know, it's a small cap company. I didn't want to mention it last year or earlier this year to my followers because it's a small company. So I didn't want to move the stock price. So I can say it now because I've been exiting the position here. But Build-A-Bear Workshop, the reason why I went into this is because I love finding stocks or companies that are so neglected by everyone else, by Wall Street, but they're still pumping cash. They're still pulling in a lot of cash. And, you know, there's times when you can just find like you're in the perfect moment where everybody's looking away and you're looking at a company saying, how is this company valued at $40 million when they're pulling in, they're profiting millions of dollars every year? You just run the basics on that. You're looking at, you know, PE of 5, of 6, and you're like, well, you know, this certainly has a lot of potential here, at the very least to pump some cash. And so that's kind of why I started going with Build-A-Bear and I started building out that position. Eventually people started to find it and they started to buy it. And so Build-A-Bear went went from, I think it was at maybe $2 a share back last year to over $20 a share. Plus I did some options in that. So it worked out pretty well from Build-A-Bear. I don't want to just sit here and, act like I've made a lot of money, because I've certainly lost a lot as well. And I want to talk about one of my mistakes that I've made after this next point here. So the other investment that's done really well that I think is pretty obvious probably, it's Bitcoin, okay? Now, I'm not a Bitcoin maximalist, but I'm pretty deep into crypto, especially these days. And there's a reason for this, because I like to read at least a book a week. And so I've been reading crypto books lately. And I think once you start to expand your mind into the crypto world, it's insane the level of intelligence in this community. I mean, look at something like Facebook. They're struggling to hire people because everybody's going to Web3 and crypto projects. All the smart people are. And I have a book right here, actually. I would highly recommend reading this. It's called Token Economy. It almost feels like a textbook, but I absolutely loved it. I just thought it was so informational. If you want to know what Web3 is, what people are talking about with NFTs, with crypto, who the hell is Satoshi Nakamoto, like all those really important things a lot of people are talking about, I would highly recommend this book. It might be boring to some people, but I think it's going to be so valuable, and you're just going to have this epiphany after you read this book, or halfway through it, and you're going to be like, wow, So I dollar cost average into Bitcoin. Been doing this since $3,000 or $4,000 per Bitcoin years ago, back in maybe early 2017. And so I've just been putting money into it ever since. It's performed well. I'm not ever planning on selling, so I can ride through the fluctuations. They can go up to 100,000. It can crash down to 1,000. I'm going to be holding for a very long term. And so, I guess I'm also doing a quick little plug here. If you want to go buy Bitcoin, you can buy it on Coinbase. I'll leave a link to them down below in the description here if you want to check out Coinbase. So those are some of the best investments that I've made in my life. I think next week we're going to go in depth, and we're going to make that video about how to make the spreads on interest rates, and just basically get free money by pulling out credit and taking borrowing against assets, and then lending it out to other people and everything. We'll talk about that next week, and how to get those stable APYs. So thanks for watching the video. Thank you to Sweater for sponsoring this video. I really am very bullish on that company. I think they have so many things going for them, and I'm excited to start investing through them. So thanks, Sweater, and thanks everyone for watching this video.